So we have been over everything that you need to know concept-wise, but again, does that mean that you understand everything now? Probably not. So right here, we have a putting it all together. We have a top-down analysis, and you can get to a flow chart. So again, this is a step-by-step process on how you would do your pre-analysis and get to withdrawal liquidity, etc. Everything you need, get to the PD array that you want to trade off of, and that is where you want to look for an entry eventually. This is all you are going to need. And then again, right here we are using monthly, weekly, daily, 4-hour. That is our higher time frame. Eventually you will notice when we do have a different trading plan, so a flow trading plan, then we will also use the 1 hour and incorporate the 1 hour, but that will also be taught to you. So what do we start off with? First off, I would like for you to look under this video because there's a Notion link. When you navigate towards that Notion link, I would like for you to open that because that way it's easier. I can't really show you during the video, etc., the Notion. So if you have it by your side, the Notion, that would be absolutely perfect because then you will be able to understand it better. So right here, what do we see at the top of our Notion? We see first off, top down. Then we see monthly, weekly, daily, 4-hour because that is the order that we operate in. So we see monthly. We start off with order flow and then we move on to candle signs. That is interesting because what happened to the market structure? Now, again, this is the first time actually that I am doing a top-down video. So right here, I have not talked about this before, I reckon. Maybe in an old video where it was somewhere hidden. But you don't use market structure on the monthly time frame. And you don't use it on the weekly time frame either. And the reason being for that is because I don't know. I personally don't have 12 years to wait for the monthly market structure to play out. So I personally don't use it. That is the exact reason why I don't use it, why I would advise for you as well to don't use it, because it's not relevant. The only thing relevant on the monthly and the weekly is order flow and candle signs. It's the only thing relevant. So we start off our analysis with the monthly time frame. Then we go into order flow mode. So we don't necessarily look at structure. We just look at the order flow legs, which you could also call a short-term range. But we just call it an order flow lag here because we're using the term order flow. We go into order flow and we see this was the most recent order flow lag. So if price is continuing higher, what are the discount arrays that it potentially can head higher from right there? That is why, because we're so focused on order flow a lot of time and it's at the core of our strategy. It's why the question, if we are going higher, where are we likely going higher from? It's extremely crucial because that will lead you to the PD array matrix that we use. And again, let me remind you, the PD array matrix that we use is under the order flow video as well, where it has a link to the Notion and I believe a PDF file as well, but correct me if I don't have that, but I think it's right there. And inside the PD array matrix, we start off with always a mitigation block. A mitigation block, I'll call it an MB. Then we have a breaker block right there. What do we have afterwards? We have a fair value gap, and then we have an order block. And then right there, we have a swing low or a swing high. But in this case, a swing low. Why swing low? Because this is for bullish, of course, discount arrays. And if we turn it around, then right here, we have MB. Wait, I need to do it the opposite way. We have swing high, we have order block, we have fair value gap, we have breaker block and mitigation block right there. Then this is equilibrium. So for example, where price is currently hovering, it will first encounter likely a mitigation block, then a breaker block, then a fair value gap, then an order block, and then a swing high. Same for if we're looking at discount arrays, it will first likely encounter mitigation block, breaker block, fair value gap, order block, and then a swing low. Exactly what we're using in the order flow leg. So if we're going higher, where are we likely going high from? Well, what do we have here? We have some kind of high right there, which is overlapping with what? With a fair value gap there. So this is a breaker block. We have our first breaker block right there, which is the first thing that we have on the PD array matrix. And then just above it as well, we have a fair value gap sitting right there. So if we're going higher order flow wise, where will we likely go higher from? Well, there's a good chance that if price is truly bullish, it will continue going higher from here. Now, will we just guess on the monthly? It might continue higher from here. No, on the lower time frame. In this case, with lower time frame, I'm aiming for everything below the monthly, so the weekly, daily, 4 hour. That's what I mean with the lower time frame here. On the lower time frame right there, we would look for confirmation that it actually wants to continue higher, because that will give us the confidence to take that potential trade and to eventually get to a trade ID that we can capitalize on. So right here, discount array to premium array, right? That is your order flow, because we are not only using the discount array, we also need to have a target. The target is just the next premium array. And if we look again at the PD array matrix, we had, let me write it down again, we had swing high, we had order block, we had fair value gap, then we had breaker block and mitigation block. Which one is the first one that we are encountering? Well, there's no place for a mitigation block, no place for a breaker block, no fair value gap, no order block, swing high. So that's the first premium array that we are encountering right there. And again, I'm talking about the respective time frame that you are looking at. If you're trading your context, because this creates your context. Whenever I refer to context, I always refer to discount to premium array. That is your context. That can be on monthly, weekly, daily, 4 hour. That is what I mean with context. So what I mean with, again, every time frame is in context of the one above it. That is exactly what I mean, because if you have the context of monthly right there, and then you also have context of the weekly inside that monthly context, and then you have daily context inside that weekly context, that is extremely high probability. With context, I always mean moving from a discount array to a premium array. Or, of course, if you're expecting lower prices, from a premium array to a discount array, which usually is either from fair value gap, breaker block, mitigation block, order block to a swing high. The swing high is usually your target. Unless it's a very big leg down lower with fair value gaps in it as well, then you would target the fair value gaps that are halfway. But we will also have examples of that. So right here, this is your context already. Based on order flow, that already is enough to get to your drawn liquidity and your buys right there. But again, it's a monthly candle. So right there, would I tell you, yeah, just go into the 5 minute right there and take longs and do whatever you feel like? No, you need the lower time frame. In this case, the lower time frame, I mean, again, weekly, daily, 4 hour. You need those time frames to agree with you that we are indeed going higher. So we follow the steps. First step is done. Well, sorry. We had order flow and now candle signs. Monthly order flow, and then we move on to candle signs. You can see that there's 4 hours left before we close this monthly candle, which is very interesting. Why is that interesting? See what we are doing. We're absolutely respecting it right now. So what is the next target? That high likely. So candle signs is shaking order flow's hand and it's saying, yes, my friend, we are likely going higher indeed. That is exactly high probability. That is what you would want to see. And then we have done monthly. Now we need to get into the weekly. I'll already give you a tip. Usually when the monthly has context for you, then weekly is not giving you context. But you can just go with the flow on the weekly. Just do whatever you feel like. But usually you're either trading in a monthly or weekly context. That's the highest probability. Because sometimes when the weekly has context, the monthly doesn't have context. So sometimes they are not in context of each other, but they're still both bullish. What I mean by that is, again, when we go into the weekly time frame here, you'll see that we don't really have any context just yet here on the weekly. But again, the monthly has our context. So that is the most important part. So right here, we do have context, as in we have a fair value gap there, and we have disrespected that low right there. But since we're trading the monthly, does that matter? Not really. So order flow here is not that relevant. Why not? Because the monthly time frame is the stronger one. So we want to keep on following the monthly time frame. Again, does not mean that we are not taking into account weekly fair value gaps and weekly PD arrays and weekly order flow. But the monthly is the stronger one. So ideally we want to trade and follow that one. Right here on order flow based on the weekly, we can see overall we've been bullish, but we did disrespect order flow right there. Order flow on the weekly is pretty 50-50, I would argue. Does that also really matter currently? Not really, because we have that monthly context. That again is very important. Then, if we move on to the daily, now it gets interesting. Because again, monthly and weekly, you would not use structure. But daily, in monthly and weekly context, what do I mean by that? Is your daily in monthly and a weekly context? So is there a weekly context going on, or is there a daily context going on? Again, remember, what is that context? If we zoom out to the monthly, there is a context going on. Why? Because we are indeed moving from a discount array to a premium array right there. Was there a context going on in the weekly? No, not really, because we're not really moving from a clear discount, not really moving to a clear premium. Again, we are moving to the fair value gap, but not really coming off of a clear discount array. So when does the context stop right there? That is not clear, because we're missing one link. You have your discount array and premium array. If you're missing one of those, then you're missing a link right there. So again, the monthly context is enough. So to answer the question on the daily time frame, in monthly or weekly context, yes, we are in a monthly context. So then we can use structure. If we are not in a monthly or a weekly context, then we would not use structure on daily. And you would use daily as your order flow guider. What I mean by that is that you're doing the exact same thing as you did on the monthly and the weekly, just on the daily, because you have no monthly or weekly context. There's no context on the weekly or the monthly. Ideally, you want to be following the daily order flow. And if there's no daily order flow, then again, you would use 4-hour order flow. And again, that's something we will get into as well. So right here, we do want to use structure because now we can anticipate potential bigger retracements. And the structure, again, the order flow is the main relevance here, because in the end of the day, we will also be following order flow here. But the thing to understand right there is that this intermediate term low right there is it somewhat gives you an ease. It gives you ease of mind that you know that is likely the protected low. So it helps somewhat in that. And I know a lot of people also like the structure. So if it helps you, then focus on structure, because that is your unique edge. So right here, what can we expect based on structure and order flow? Well, first off, structure, that is our target, and that is also our intermediate term high. So that right there is our target. This is our intermediate term low, right there. And in between, what are we doing? We are forming short-term ranges to target that intermediate term high. So nice. We're seeing nice price action here. Yeah, perfect. Then order flow wise, what are we doing? Well, we are currently expanding. Whenever we are expanding, I want to wait for a new retracement. So there's no reason to go into the lower time frame there. Why not? Remember what we talked about yesterday. The monthly, weekly, daily 4-hour, and eventually also the 1 hour, etc. What we mentioned, they are creating a boundary for you. So you're using the monthly, weekly, daily 4-hour PD arrays to get involved with price. If there's no PD array right there, and again, I'm not talking about premium arrays because we only look at discount arrays right there. Premium arrays right there are not of current order flow, so you don't use those. Right there, we need to wait for any discount array that forms right there. Any discount array, the same what we saw on the monthly, any discount array, and we want to trade off of that discount array on the right day. And what I mean with the right day, because that is also mentioned in the Notion, what I mean with the right day and during the right time on the lower time frame. So within that meaning, I do mean the lower time frame, as in I mean the 5-minute, the 50-minute. That is something we will get into. But I can't tell you that right now because that is too overwhelming for you to know. Just know that you want to get involved in a PD array on the right day during the right time. And that will be cleared up later on. So right here, we follow order flow. Order flow is just this order flow leg right there. That is our order flow leg. So this is our last line of defense. Anything that's here, that is what we will use on the right day to guide us higher. That's exactly our thought process. So is the 4 hour in context? Let's see. If we dive into the 4 hour, is the 4 hour in monthly, weekly, daily context? If yes, structure, order flow, candle signs. Yes, in monthly context actually. No weekly context just yet, no daily context just yet. But they might still form before we reach that monthly context high right there. So yes, we use structure. What are we seeing here? We are seeing intermediate term low, intermediate term high, intermediate term low, intermediate term high potentially, intermediate term low potentially. And then we continue structure higher. Interesting. So right here, just before we dive into current price action right there and go over the further things, what I meant with, yes, we also need the 4 hour to first show signs that on the monthly we indeed want to move higher. How can we use that? Because the thing I always mention is that you have a monthly fair value gap. Once you have a monthly fair value gap, you are first off looking at the 4 hour here for an ST and order flow getting confirmed. And then second of all, you are still taking into account daily and weekly of order flow because they are likely going against you. What you would want to do here is remember the rule that we had. If we are coming off of a discount array, we only need one ST on the 4 hour right here, right there, to go into what? To go into the 5 minutes, 15 minutes in that fair value gap right there with that order block to look for an entry opportunity. Then afterwards, we want to be careful. Why? Because we are stumbling upon daily order flow that is still going against us. Now again, I can hear you think, but monthly order flow is stronger than the daily. So we don't really have to worry about the daily order flow, right? That is true. That is very true. And that's great thinking. I need to thank myself, I think. It is great thinking. But still, we want to take into account that here, from that order block, from that fair value gap right there, we can take rejections, as in exactly what we're seeing right there. We are rejecting off of those. We're not taking the lows, but we are rejecting off of those. So only once daily order flow shows new bullish fair value gaps. This right here is the highest probability. Once we now have a retracement and we can get involved, that is the highest probability. Because now daily order flow is also agreeing. So right here on the 4 hour, this is your highest probability entry to go into, to look, that is the highest probability discount array to look for potential 5 minute, 15 minute entries. Only once we reach that daily fair value gap that is sitting right there, then it's not high probability anymore. Because this is where price will have seek and destroy conditions. Why? It's stuck between two order flow levels, between the daily order flow and the 4 hour order flow, and of course the monthly order flow as well. So right there, this is not high probability at all. Only once we create a daily fair value gap higher, then it is extremely high probability to look for longs. That is exactly going over the process of how you can know, all right, that discount array will it likely hold. And that is also the same exact process you will be using in your execution, etc. So that's already a sneak peek. Then, right here, structure we went over, and we can see structure is now more zoomed out. Intermediate term low, intermediate term high, intermediate term low, intermediate term high. We can expect a retracement based on structure alone. Now, and then order flow is the next step. What is order flow on the 4 hour here? Well, the most recent order flow leg is right there, because we don't have any fair value gaps higher right there. Perfect. And if we had, let's say that we did have, so let's put it this way. Let's do this. Let's say that we did have a fair value gap higher right there. We have a fair value gap right there. We can all see it. Fair value gap, perfect. Doesn't look fake at all. So right here, we have a fair value gap higher. Let's just say that as example wise. Then right there, you would not take that order flow leg. Why not? Because on the daily time frame, we are creating daily fair value gaps. So you would use those. Why? Because the 4 hour needs to be in context of the daily time frame. That 4 hour order flow lag right there is not in context of your daily right there. That is when you wait for the daily time frame, because that is the highest probability, because that is leaving behind the fair value gaps right there. The same why we took the monthly fair value gap instead of this weekly fair value gap, because the monthly is the highest context and that is coming into the highest order flow. The higher the time frame, the stronger. So you want to use this time frame right there, and that will continue, etc. So that is very important to understand. So what are we doing right here? We are waiting, because now we got to our thing. And again, when order flow on the 4 hour right there, just to finish the 4 hour here, when order flow on the 4 hour is not showing anything, then we don't do anything on the 4 hour. There's no reason for us to be on the 4 hour. So what are we doing right there? We're going into the daily. We wait for a daily discount array, and we trade off of that. So what are we doing to sum it up? We're waiting for a discount array on the daily where we want to trade off of at the right time, at the right day. That's the steps what you need to know right now. So now we have gotten to a mechanical, in somewhat of a mechanical. I know I always preach it's around 80% mechanical, 20% intuition, but that intuition part, that is where your potential is. And that is very important. So this is how we got to a drawn liquidity, to a bias in a mechanical step. Again, will price action always be this nice? No, of course not. So we will also go over other examples, and in the forecast and breakdown as well, we go over a lot of examples where price isn't clean. So right here, what is high probability? Again, we can write down the bullish arguments and the bearish arguments, what we just did as well, right? We've just gone over the bullish arguments and the bearish arguments, because by going over the flow chart right there, you go over the bullish and the bearish arguments automatically. So then high probability is every time frame is in context of the one above it. Now right here, in context as in moving from PD ray to PD ray, no, not every single time frame is in that context. Is it in context as in we are taking into account that the 4 hour needs to be in context and then in context as in it's taking into account the daily time frame as well, where it's moving the discount rates? Yes, that is what we just did. So then it is high probability. Then order flow confirmed. Is there order flow confirmed? On the 4 hour, yes, there is. On the daily, we have one ST. One ST on the daily time frame, one fair value gap off of the daily time frame, is more than enough for a monthly discount array. So yes, order flow is indeed confirmed. And combining the time frames, how we confirm order flow, is also something we will do in execution. So that is also something that will be cleared up. Just to make you aware that everything will be cleared up that doesn't make any sense right now. Believe me. The higher the time frame context, the better. So what I mean by that is monthly context is way better than a 4 hour context alone. So the higher the time frame context, the better. That's what you want. That is the higher probability. Low probability, not coming off of a PD ray. So when we are following 4 hour STs or 4 hour or daily STs even, and we're not coming off of a PD ray, we're not in weekly or monthly context, then it's all very low probability. So that is what you want to be taking into account as well. That is very important. Then, no order flow confirmed as well, especially when there's no order flow confirmed coming off of a PD ray, then, no order flow confirmed and you're not coming off of a PD ray. That is extremely low probability. So let's say there was no a monthly discount array and no weekly discount array in the form of this fair value gap right there. It wasn't there, no monthly, no weekly discount array, then all this would have been low probability because we can't make sense of it. So ideally you want to follow daily order flow, and we would wait for a new fair value gap higher right there. Since we already have this discount array, we can just follow one daily fair value gap higher right there. So that is again how the probabilities are stacking up, the bullish and the bearish arguments constantly. Then the last two questions. When do you go into the lower time frame? When you have context on any time frame, wait for it to retrace back into a PD array. Again, with context on any time frame, in this case, I'm aiming for you are taking into account the time frame above it, but it doesn't need to be moving from PD array to PD array. So exactly what we did right here. So when you have context on any time frame, wait for it to retrace back into a PD array in the order flow lag. In that PD array, on the right day and during the right time, you want to go into the lower time frame. And lower time frame right there, I'm aiming for the 5 minute, the 15 minute. Again, you can make the notion as well in your own words, as long as you don't never understand this, please. Never change the core of the concepts that I'm teaching here, please. If you've been trading a year, like with my concepts, etc., yes, please go ahead and add your own sauce to it and do whatever you feel like. If you are indeed profitable and you've been shown to be profitable. But right here, don't change the core of it. But if you want to put it into your own words, for example, the context word, just to clear it up for yourself, then do it. But don't change anything. Please don't change anything, because then I can already see it happen, and it has happened before, where I give the information and all of a sudden 2 weeks later the person is trading macros. The person is trading the Enigma Reaper. And I'm flabbergasted. I think, what has happened to you? What happened in the meantime? It's very disappointing actually as a mentor. So because I feel like I failed my job in that case. But right there, so I need to give those clear instructions. Don't change anything. Follow the steps. And I saw someone in the Discord say today, which I was extremely happy about, because that is exactly what I'm aiming for. They deleted every other Discord server. They don't pay attention to their Twitter, their social media accounts, whatever. They are following my instructions. And again, that might seem very cult-like almost, but that's not what I'm trying to aim for. I'm trying to aim for that we don't have contradicting beliefs. Because when one mentor says this and the other one says that, then who do you believe? And you don't really know where to head towards, and you'll just be stuck for a very long time until you figure that part out, where you now figure out, oh yes, I need to stick to one mentor. And again, a bit off of off the grid right here, but that is very important to understand, right? Just to keep the mindset engaged, keeping the mindset in the right place. That is also a big part of this mentorship. Constantly keeping the right mindset. Very, very important. So, right here, which PD array would we use? Your order flow lag will only have so much PD arrays. What I mean by that is it will only have a handful of PD arrays. It won't have 10 PD arrays. The only thing you are taking trades off of essentially is the order flow lag, the most recent order flow lag on the monthly, weekly, daily, 4 hour. It's the only thing you are taking trades off of. You're not looking at irrelevant order flow. So you're not looking at order flow to the left. That's not relevant to take trades off of because it's not part of current order flow. So you don't use that unless there's one exception to the rule. Thank God it's Friday setups. But again, that is a different trading plan that we will be going over. All right, then it all comes down then eventually, like I mentioned, your order flow lag will only have so much PD arrays. So here we only have one fair value gap, two fair value gaps, overlapping part, swing low. Swing low we will likely not reach. Why not? It will not do something like this and then continue higher. Doesn't make any sense, right? So it will either come into this fair value gap, that fair value gap, with the overlapping part and then continue higher. This right here is, I would argue, the lowest it can go. So when we know that, all we have to figure out time, because like I mentioned in the Notion, then it all comes down to time. Use the PD array that gets traded into on the right day. And that is again what we will be teaching. So I'm sorry I can't say that right now, but don't get overwhelmed. Don't look at the other episodes to figure it out. But please just stick with me right here, all right? So this was the first example. Now, just to hammer it into your head, and because I think we're on a nice stroll right here, let's go and look at a few other examples as well. So the first one, again, is GBP Canadian dollar. Right here, what are we seeing on a monthly time frame? Just looking at this price action right here. This is not order flow. So recent order flow is actually still this. but we did make a move higher right there. We could create a fair value gap if we push even higher, but currently the monthly is not in context. We can come to that conclusion, right? So candle signs here also not really relevant, because if there's no monthly order flow and we can't get past the order flow, how can we get to the candle signs? That doesn't make sense, right? Because we need to first order flow, then candle signs. If there's no order flow, then there's no candle signs on that respective time frame. On the monthly time frame, no order flow, no candle signs. Then here on the weekly time frame, what are we seeing? Let's remove the monthly lines just to keep our focus on the same things. We are seeing this weekly fair value gap right there with this recent order flow lag towards what else? Premium rate. So we have context. We have context to work with on the weekly time frame, because we're moving from this weekly discount rate to that weekly premium rate right there. We have context. Perfect. Candle signs. Candle signs is acting nicely here, but then we're coming here and we're not leaving behind a fair value gap on a weekly time frame, even though the weekly should likely create a new fair value gap higher. Why should it do that? Because if we create a new order flow lag, we should have a new fair value gap higher on the same time frame. Order flow lag is on the weekly time frame right here. Then to create a new weekly order flow lag on the weekly, again, it should create a new fair value gap higher, which it fails to do right here. Based on candle signs, because now we are looking at candle signs. Based on candle signs right there, this is not looking very good. Again, we are still bullish because we have no arguments right there to look for bearish prices just yet. Maybe some scalps, etc., but no concluding fully 100% bearish arguments. As well, no 100% bullish arguments, which is interesting, right? Then if we go into the daily, now we look at structure. Why do we look at structure? Because we have weekly context. In weekly context, if yes, structure. First structure, intermediate term low being created right there. Intermediate term high, which is our target right there. All right. So structure wise, we still have the same thing intact, because these are our short-term ranges. They are guiding us towards the intermediate term high. So that is still intact. All right. Let's look at order flow. Order flow, right here we have fair value gap higher. We came into that fair value gap right there. We're continuing higher off of that, which is creating a new order flow lag. That is our low of the order flow lag. We have one fair value gap higher right there. Let's look at candle signs. 1, 2, low close in that fair value gap. 3, 4, 5, 5 times 6 candles in the same fair value gap. That's not very nice, because if we were focusing on candle signs, remember what we had. If we are respecting like a wick like this, there's absolutely zero reason in the world that Thursday right there should come back below that low. No chance. Should not happen. If price was going to be bullish right there, instantly it would have been bullish right there off of Thursday's open. Would have never came back below that Wednesday's low. So this fair value gap is out of the play for me. It's not in the conversation anymore. We do have a fair value gap lower right there, which we could potentially take a trade off of. But if we keep in mind the bullish and the bearish arguments that we just had, can you come to the conclusion that I am coming to? This is extremely low probability. Based on the daily alone, we don't even need to go into the 4 hour, because when you go into the 4 hour right here, when clearly already it's stating low probability, then in the 4 hour you will likely just force something, because then the boundary is the 4 hour. But what a lot of people also do that don't know about this mentorship, they go into the 1 hour, 50 minutes, and they go force a bias. And that is not high probability anymore. Not at all. So right here, if we wrote down the bullish arguments and bearish arguments, we can already tell, this is not really bullish, not really bearish. What is it? Overall, I would say 70% still bullish, but somehow we are not continuing higher right there. So we might need a crazy news event to push higher. Again, how many hits will we take before we get it right? That is the thing you want to keep reminding yourself of. Because If you're trading with 70% bullish arguments, 30% bearish arguments, then what are you essentially doing? You're trading in low probability conditions because you can't get 100% on one side. When you can't get 100% on one side, what you are doing as well is you're trying to trade something and you're taking likely a lot of hits before you get the draw on liquidity right. So we can flex with the win, but people don't know how many losses we took beforehand. And that is extremely dangerous and very detrimental to your financial equity. So then high probability every time frame is in context of the one above it. Right here. Yeah, but it is in context of the one above it. That is true. But it's not agreeing with the ones above it, like we just saw in ES. Order flow confirmed. Yes, order flow is confirmed, but order flow is not following through. We're not creating a new daily fair value gap off of this daily order flow lag. This candle signs right here is of course very relevant because 1, 2, 3, 4, 5. It's already an early indication that this fair value gap doesn't want to follow through. The second indication is that when we do move higher, we are not creating a fair value gap. And that is very dangerous then, right? So the higher time frame context, the better, etc. Not coming off a PD rate. We are coming off a PD rate. No order flow confirmed. Yeah, order flow is very vague right here. Again, same questions. Let's also dive into the 4 hour because the 4 hour right here, we can see we have bullish order flow off the daily fair value gap. And then we have bearish STs off of that daily fair value gap right there. What are we doing? We have bullish and bearish arguments. Now, based on candle signs, we can force an ID that the 4 hour fair value gaps here, the most recent ones, are telling me, all right, we are not respecting this order block, not respecting that fair value gap. We might want to continue lower and target these lows. But this is also an important question for yourself. If I force a bias here, I am already taking into account that there's no other pair, not one single instrument out there that is higher probability than this one. So is this at the top of your interest list? Absolutely not. Why not? There's more fish in the ocean, more fish in the sea. I think there might be an instrument that is higher probability than this one currently. So I will look at other pairs, at other instruments. I'm not settling for the bare minimum right there. Absolutely not. I want the highest probability price action. I want to be very picky, extremely picky. So then we move on. And this is something we would not look at. We would not look at. So when do we actually look at it? That's something I just thought of. When do we actually look at it again? Is when we have new context. So new daily context, ideally. New daily context, that is what you want to have, ideally, a minimum. And again, if we are not following through on weekly context, then this might be a pair you want to avoid for a while until we have clear order flow again. Now, right here, if we do continue lower, we have clear daily order flow, but the weekly is still bullish. So again, you will still have bullish and bearish arguments, and that is not what you would want. Then, the beauty of them all. This one is, of course, we've gone over this a couple of times, but this one is still very interesting. Let's do the same process here. Let's actually do it like this as well. Right here, on a monthly, what is order flow? Order flow has been bullish all this time. We have this order block and this fair value gap to work with based on the monthly time frame. So what are we seeing right here? We did sweep that, but we are kind of respecting that low. Overall, we've been bullish. Perfect. We don't look at structure. No structure on the monthly or weekly time frame. Oh, I hate this when it's... Yeah, perfect. Come on. All right, perfect. So what are we doing here? Let's just rewind that. Perfect. Based on candle signs, what are we doing? And again, the candle signs only confirms the order flow ID at that moment in time to go into the lower, to go into the weekly, daily, and 4 hour when we do touch that discount rate. We don't need to wait for this candle to close like this, right? Already we can go into the lower time frame, and lower time frame I'm aiming for weekly, daily, 4 hour here to go into that discount rate the same as we did on ES. We don't need to wait for this candle to close like this. That's not what we need to wait for. But we do understand that this candle trading when it's like this and then coming into the discount array. So when it's like that, this is lower probability than trading the next monthly candle when it's like that, right? We understand that. So that is when this is a higher probability. That is again comparing the bullish and the bearish arguments. All you're doing, you're looking at candle signs right there and you're thinking, there's bullish and bearish arguments. Perfect. Weekly context. Weekly is currently in the same context. Now, just to add on to the bearish arguments, we have no fair value gaps lower right there. Perfect. The fair value gaps are always telling us a story. I'm sorry if you can hear my dry mouth right now. I've been going for a while. So right here, we have no bearish fair value gaps right there. Perfect. That is what we would want to see, because now clearly we still have the bullish momentum. We're coming even into that weekly fair value gap with that weekly premium array as target. We also have context on the weekly. So we have monthly and weekly context. Candle signs is telling us, respecting that weekly fair value gap, it's continuing higher right there. Perfect. Again, when you're looking at candle signs, you're looking at candle signs, PD arrays, and candle signs, how we are respecting and disrespecting on the same exact time frame. You're not going into the 1 hour right there in the monthly fair value gap to say, we are closing inside the monthly fair value gap. Yeah, obviously, it's the 1 hour time frame, right? So that's not what you would want to do. You look at it at the same time frame with the most things that we're doing here. We're just making sure the time frames are in context of one another. So perfect. We have our premium to discount to premium array. Perfect. Daily in monthly and or weekly context. If yes, structure or flow candle signs. Yes. Intermediate term high, intermediate term low. Perfect. Short term ranges, and we're targeting what? We're targeting the intermediate term low. Intermediate term high. We're targeting the intermediate term high. Order flow. Order block. Hey, fair value gap. Alright, that's pretty interesting. Oh, we're coming into it. What are we doing on the 4 hour? Just already diving into the 4 hour. This is how I would go about it. So now we're speeding it up a little bit. Order flow lag right there. This is getting disrespected. Why? Because the 4 hour right there is not in context of your daily time frame. So if you're taking a trade right there and you're losing that, then that's not really price's fault. That's your own mistake right there, because the 4 hour is not in context of the daily time frame. There's a daily fair value gap hovering below that order flow lag. So you would never look at that. That's not high probability. Again, you can look at that, but then again, it's the same question. Do you think that that is currently the highest probability instrument to trade? When there's a fair value gap hovering below your order flow lag. And I mean a fair value gap that is on the time frame above it. So a daily fair value gap hovering below a 4 hour order flow lag. Is that the highest probability? Don't you think there's a better fish? Really? Come on. So right here, what are you doing? You're waiting. Now this is already where you can potentially dive into the 15-minute off of that daily fair value gap and the daily order block at the right time and the right day. That is important to understand. Afterwards, if we wait, because right now, if we have no boundary, when there's no boundary anymore, we don't look at the 15-minute anymore, because if the 15-minute is just hovering here and it's just going all over the place, then we don't have a boundary anymore, because we don't want to take 10 hits before we get the right move. So we need a new boundary. That new boundary is what? A 4 hour fair value gap right there. When in doubt, wait for a 4 hour fair value gap. That's all it is. Then right here, that could even be an entry, but right there, in that 4 hour fair value gap, that is where you would do what? You would go into the lower time frame to look for an entry. Perfect. So this is all in context with one another. Again, right there. And the reason why I'm showing you USD/JPY. This has been the highest probability price action we have seen in a long time, even in August. In August, this is absolutely insane. In a summer month, we got the highest probability price action right there. Absolutely beautiful. It's a shame I was on vacation. So right here, what are we seeing again? If we go again over the checklist, monthly order flow is still continuing higher. We are still potentially creating what? A monthly fair value gap right there. So that might be interesting. Now, we don't have any new context because that context is gone. So afterwards, we look for new context. We go over the same process. Weekly context. Yeah, we do have weekly context. Perfect. Daily. No, because we are waiting for that weekly right there. So right there, we do have a 4-hour fair value gap, but it's not as high probability because we do have a weekly fair value gap sitting right there. And then eventually we come into it, and then we're continuing higher after that. We reach the weekly target right there. And then afterwards, what are we seeing? We reach the target, so we need new context. We don't just go blindly into the lower time frame to take an entry right there. We don't go into the 4-hour as well to take every fair value gap higher right there. No, we are consistently reliant on context. Do we take this trade lower? No. Why not? We just established the whole bullish context right here. We were bullish for ages. Are we taking just one singular 4-hour fair value gap lower? No, because there's bullish and there's bearish arguments. So again, at the end there, I skipped it a little bit because that is I'm using the exact checklist, but it's already in my head. I've done this for such a long time that I'm able to do it a little bit faster, right? But you can use the checklist and go over it step by step, and you will get to a high probability pair and instrument to trade, etc., etc. It's everything you need right there. So then eventually, right here, we are just in low probability conditions. And that is exactly how I would view that as well. Based on candle signs, I think you can see pretty low probability how we're closing right there, right? So we expected lower prices. Does that mean when we expect lower prices that we automatically take the trade right there? No, because it's not high probability. It's 50-50 right there. You don't want to get involved. So this is exactly what we do. Now let's finish off with one last one. So right here on GBP New Zealand dollar, let's go over the monthly. Again, let's do it a bit quicker here. This is how I would do it. Monthly, are we in monthly context? Not really. Your recent order flow lag is, we're not even creating potentially fair value gap right there. So no monthly order flow, no monthly candle signs to work with as well. Weekly context, weekly order flow, discount array to potential premium array right there. Nice. Candle signs, currently if the candle were to close right there, it's supporting the idea of the next candle also trading higher. Perfect. Daily, what are we seeing? We have bearish daily order flow. Alright, why do we have bearish daily order flow? And we have bullish weekly order flow? That is very confusing, right? That is already a bit contradicting. But right there, to confirm this bearish daily order flow, what do we need? We needed a new bearish daily fair value gap right there, which at that moment we didn't get. So right there on the 4-hour, what are we also seeing? Bearish order flow. So this might be a trade that you think, yeah, perfect trade. We'll take that every single day. No, it's not a trade you want to take. You don't want to use this premium array right there. Why not? We're coming into a weekly fair value gap. That weekly one is stronger than the daily and the 4-hour. But again, it can continue low right there. We're a bit 50-50 here. So in this case, what are you doing? Well, to continue bearish order flow, we would need to create a fair value gap lower. We mark out that low. On the 1-hour, what are we seeing? On that day, boom. That right there is already an indication we're not creating that daily fair value gap. So what can we do? We can target that intermediate term high right there on the 1-hour. Boom. That right there is already an entry covering that low, targeting the highs. And that is exactly what we will go over in execution as well. So this is your top-down analysis that we will use. Tomorrow we will go over the exercise and we will close this chapter for now. But again, it's not closed because everything is dependent on the higher time frame. Everything. It will all come back again. So it's very important to understand. The higher time frame is doing the hard work. Always. All right. Perfect. Thank you.